Hello everyone, I'm Nikhil Mishra from Setu Capital. So we have brought another small cap company which we'll be discussing today, and that is SJS Enterprises. So this is a decorative aesthetic supplier. So what are aesthetics? These are the objects which are used to enhance the beauty of a consumer durable or an automobile product. So the chrome plating and the other stickers which you see in your car or automobile or sanitary products, this particular company supplies it to the original equipment manufacturers. Now, this is a leading aesthetic supplier in India. It has a small contribution in exports as well, which it is trying to grow. Now, this company is at an interesting juncture. This has been a very slow growing industry in the automotive sector. But in the recent times, due to the increasing visual appeal which is required in order to sell a automobile, these stickers and other accessories have become quite prominent, and even there is an aftermarket for all these products. So why this company at this point in time? Let's have a look at it. So if we look into the SGS, it is one of the key domestic suppliers to most of the automotive products, and also to a very large organization like Whirlpool, electric vehicles, Graviton, Eladio, etc. So what it is doing is that it is enhancing its product portfolio as well as thinking of inorganic expansions as well. Now, these products in itself are very easy to export, very easy logistically to transport. So they are also thinking in terms of exporting these products. Now, this company was actually founded by three promoter group entities 20, 30 years ago prior. And in 2015-16 around, the two promoters exited out of the three. And Mr. Joseph, who is the J in the SJS, has been continuing in this company. Subsequent to that, private equity fund Everstone came and took stake in this company, brought in very experienced and talented management like Mr. Sanjay Thapar, who has had an experience of working in Minda Industries, Telco, and who is looking after the strategic expansion, inorganic expansion, and finance related field. They are also in the process of hiring a CEO for the company who will run the day to day operations of the company. Now, this company was also had also recently IPO'd. Now, most of the IPO, since the acronym goes, it's probably overpriced. Most of the IPOs generally trade at lower prices after 1 or 2 years of their listing. That has happened. It is below its IPO price. Now, compared to the new age technology platform businesses, which were valued at exorbitant prices and didn't make any investment case, this company was relatively lower priced. Now, there is a backdrop to it. The backdrop it is that this company has not been growing at very high growth rates in the past, but that is about to change now. There are few factors. The this company also made along with a collaboration with Crisil, made a study about the aesthetic industry and what is the expected growth rate of that industry. So they expect a 20% growth rate. But with any means, sell side research or anything, you should take it with a pinch of salt. And the growth rates, although have been have been estimated to be 20%, but still they are relatively high vis-a-vis the auto industry. Now, what is the strategy going forward? So they intend to expand their marketing base by expanding into newer geographies. As I had said in the past, in the starting, that these are logistically very easy to export, and that's why the company is focusing more on that direction. They will keep on expanding their existing relationship in terms of different types of products, aesthetic products in the same companies which they are already supplying to. They will also look into the cross-selling opportunities with a different form of expansions. Recently, they had acquired a company called Exotech, which is into chrome plating business. Similar inorganic expansions are going to take place. So the SGS management is actively looking into the inorganic expansion, and they have a M&A pipeline. They expect to grow organically by 25%, and in above that, they also want to do some inorganic expansions. So if you look into the financials of the company in the past 7 years, from let's say March 16 to March 22, you can see that the sales of the company has hardly doubled. They have not even doubled. Although the operating profit margins is relatively high if we take it into the context of OEMs. So it is around 30%, which is a high number from an means auto supplier point of view. This company is completely debt free, more or less debt free. Working capital related debts might be there, but which gives enhanced uh, enhanced confidence to outside investors like us. The net profit margins are also high in the range of 19-20%. The other important factors in terms of cash is that this company has been converting all its profits into cash, which showcases that there are no working capital issues. The trade receivables, etc., have been completely converted. If you look into the revenue from external customers, most of the sales do come from domestic domestic companies, while there is a small component in exports. If we take into account there is a customer concentration, which is a part risk, part opportunity. Around 16% of the products goes to the single customer, which is relatively high. Now, what is the outlook for this company for FY23? So they wish to grow by 25%. They already have a visibility order book of 90% for FY23 projected sales. And above that, they are looking for other inorganic as well as other orders from their in-house as well as external customers. With increasing margin profile and somewhat uh, efficiency improvement in Exotech, etc., they expect to grow by 30% in terms of PAT in FY23. Looking into valuations, they trade right now at 4.6 times sales, 23 times earnings, and 3.7 times book value, which in case of an auto supplier which who is able to generate 20% margins is not bad. They are not very overvalued. They are not overvalued, I would say. Given the fact that they keep on, so many people might have a question that why is it available? Why did they IPO at this price? In the past, they have not been growing. But stock markets and its performance are all about future. What they perform from here is going to be the interesting aspect and will determine the future course of stock prices. So this brings us to the end of this presentation. In case you did like my presentation and want to hear more about the small cap and mid cap related or micro cap related companies, do subscribe to my channel, and do hit the like button. It helps in YouTube algorithm. And in case you do wish to take our services for stocks and mutual fund, do help us by just calling us, and will someone will contact you from our team, and then it will help you in your wealth creation journey. For more content in respect of small and mid cap, do subscribe our channel and hit the bell icon. Thank you. Thank you very much.